I make money trading for just 60 minutes and I look for only one specific pattern that shows up right at market open every day. And my students consistently make money doing this every day as well. After 5 years of going in circles, wasting a bunch of time, trying a bunch of complicated strategies, I finally figured out a simple, repeatable setup that actually works. And it takes less than 1 hour a day to consistently execute. No more overcomplicated trading, tons of indicators, and sitting at your charts for hours on end. After failing for so long, I finally realized the key to becoming successful at trading for me was to focus on just key areas of support and resistance. It completely simplified my trading. Instead of chasing the market and forcing trades, I started to wait for the market to come to me. That shift not only made me more relaxed, but it also gave me stronger risk-reward ratios, allowing me to risk a small amount for a large amount. To give you a super quick overview before we dive into the nuts and bolts of how you can consistently execute this pattern yourself every day, all I do is when the US market opens, I look at the first 30 to 60 minutes. All I'm looking for is a clean support and resistance level, and then I look for a few key patterns. For example, right here, there's a nice double top. All I do then is I see a nice candlestick pattern, and then I enter in on a trade short, betting that the market is gonna go down. And then from there, I let the market play out. I've noticed over time that the market consistently has a reversal in the first 30 to 60 minutes of a trading day. And so what this strategy does is it allows you to take advantage of that reversal, and then coupling that with looking for key areas of resistance or support, you're able to essentially ping pong the market between those levels, capturing a big potential profit for a smaller amount of risk. And this is all I do every day. This is the only thing I look for every single day. And it allows my trading to be super simple and straightforward so that you can go into every day with a plan and know how to execute it. Instead of what I did before when I was unprofitable, I was trying to match what the market was doing, and that just was not profitable. And I know from teaching a ton of people how to do this, that's the exact same way they feel as well. And to help you consistently execute this strategy, I've created a free 14-page guide that'll walk you through the major patterns that I use to look for reversals, look to enter in on my trades for confirmation every time I look for this strategy. You can download it in the link in the description of this video or using this QR code. Now, to break this down for you in a simple entry checklist, the first thing I do coming into trading every single morning is look at the big picture. Now, I trade on a 1-minute chart of the NASDAQ futures, but you can really trade this on any time frame or any market. I have a lot of students that just trade this on an hour chart. They use it on crypto, they use it on Forex. You're just reading the candlesticks at the end of the day. There's no indicators, anything fancy. So that's the big important thing, is that you can trade this anywhere. But this is what I trade on. And so the first thing I do when I come into the market here, I kind of just zoom out and look at, okay, you know, the market's opening up here in a minute. What am I looking for, right? Where are the key areas of support and resistance? Now there's a big one down here, and then there's kind of a big one up here for a resistance level. You know, it touched here yesterday, it touched here today, and then there was a big bottom down here. And another thing to keep in mind is there was a touch here overnight, and then this is where the market closed the previous day. And so sometimes the market will bottom at the previous day's close. So I just drew this one as well to just keep in mind for that. And so when the market opened here, it opens up at 7:30 my time, but this is just the New York Stock Exchange open. So 9:30 Eastern technically. So all I looked for is, okay, well, we opened and we bottomed here at that, you know, overnight previous market close level. And so in trading, you always want to just keep an open mind of, okay, I don't know where the market's going to bounce, but I'm going to be ready for if it's going to bounce at an area I like. And so what I was looking for here was it to potentially bounce here, because it bounced here once and then it showed some strength and came back and started to make a double bottom. That's a really good key pattern. And so from there, I pulled up a risk reward tool and I said, okay, if I jump in here and I put my stop here and I'm risking, let's say $90, I'm trading on a small account right now, trying to grow it again. just to prove that this works on a small account. Again, you've seen just like that example I just had before, I've used this on a large account. You can use this kind of on any size that you want. But essentially what this tool is showing you is that, okay, if I trade 4 contracts, I risk $90, where can I, if I target, I like to target 3 times my risk. If it goes up here, I'll make around $270. So to go into the live recording of this, because this is an actual trade I took recently, is once it kind of had that double bottom, I looked for a buy. And so that's kind of jumping forwards a little bit, but to go back to really step 2 of my process is look at this downtrend line right here. That's a big key to these reversals, is seeing that, okay, well, the current downtrend is broken. Because if you're looking for a reversal trade, well, the market into a support or resistance level, and I don't have it drawn here on this chart, but we just looked at the level that we're bouncing off of. The support level would have been right here. And the key is, well, the market in a strong downtrend, it could just keep going and break through a support level. And so what you want to do is you want to first make sure that that downtrend is actually broken, so that it can start a new uptrend. And so that's what I look for every time as well, is make sure, analyze, look at the candlesticks, just look at the swings. You don't need to use any indicators or anything. You're just looking at the raw data. I also realized over time that simplified things way more for me, is just looking at the raw data of the trade. And so from there, okay, step 2, downtrend is broken clearly when this happens. And then after that, it comes down here and makes a nice clean double bottom. And then I wasn't quite sure about it after this candlestick, because this was a really strong bearish candlestick. I wanted to see a little more strength. Sometimes in the market, what will happen after a big candlestick like this, it'll bounce back a little bit just because it's overextended a little bit, but then it'll continue lower. And so what I waited for that bounce, see if it continued lower with this candlestick right here. Essentially, that's it, continued lower, and that failed. And so then I put in an order right there, jumped in long, and then I let the market play out. I moved my stop to break even after it broke this previous high, because I wanted to take that risk off the table. You don't want to let the market go in your favor and then come back and knock you out at a loss. And then from there, I just trailed up my stop loss. I put in a limit order actually at 2 times my risk, just because the market kind of felt a little choppy. I was totally happy getting 2 times my risk for a profit. And you can clearly see there, it almost hit me. And so then I just elected to kind of move things up a little bit, because there was this uptrend here. I kind of like to manage with that as well. And then from there, it just looked like it was starting to slow down. I kind of was just reading into the candlesticks, reading into the market that, it's either gonna continue higher, or if it kind of starts to just slow down, I'm gonna move my stop loss up and get out. It's at that 2 times my profit that I already am kind of looking for. I only risked like $90 on this trade, so I'm up really 2.5 times right now. And so at that point, I'm happy with the trade. That's $250, quickly after, 20 minutes. And then at that, I called it for the day. I didn't even have to trade for 60 minutes. And you can see my read there was right, and the market kind of started to pull back. And at that point, that was just a quick scalp. And so this is just what I repeat consistently every single day. And so make sure to download that 14-page free candlestick patterns guide in the link in the description of this video, or with this QR code right here. It'll really help you consistently execute this strategy and show you more patterns that I use to enter in on, other than the quick ones I just went through. As well, if you want a more in-depth guide into this strategy and more trade examples to kind of flush out how it actually works, check out this video right here.